this video, we're going to cover a news story that seemed to take the world by storm, especially the financial world. And this story is how Peter Thiel, a billionaire, used an everyday American's retirement account known as a Roth IRA to build a $5 billion nest egg tax-free. First, we'll start by talking about who Peter Thiel is. Then we'll talk about what a Roth and self-directed IRAs are. Then we'll debate whether what he did is unethical or brilliant. And then if you stay all the way until the end, we'll talk about whether this strategy that Thiel used is something that you and me, everyday people, can replicate. Before we really dive into this story, it's important that you understand who Peter Thiel is. Some of you may already know who he is, but some of you may not. So let's quickly go over who Peter Thiel is. Thiel was the co-founder of PayPal, where he was part of the PayPal mafia, which included Elon Musk and Reid Hoffman and the founders of YouTube. Thiel also co-founded Palantir Technologies, the Founders Fund, and was the first outside investor in Facebook. And keep in mind what I just mentioned about Thiel being the first outside investor in Facebook. That's going to be important as we get into the rest of this story about how Thiel created this $5 billion Roth IRA. Thiel is also an author of a very well-known book called 0 to 1. And I actually am a big fan of this book myself, but what's interesting that I didn't know about Thiel until I started to research him for this story is that Thiel actually didn't set out to write this book, and he really didn't write it much himself. What he did was he actually gave a bunch of lectures at Stanford, and there was a graduate student in the audience who took really detailed notes about everything that Thiel was talking about. And the graduate student ended up giving those notes to Thiel, and Thiel decided that he wanted to turn those into a book. And so it's mostly actually based on the notes from a Stanford graduate student who attended Thiel's talks. But the book went on to be one of the best-selling business books currently, and it's a favorite of mine as well. Thiel also has a net worth of about $5 billion. And again, just like how he was an early investor in Facebook, keep in mind that I just mentioned that his net worth is $5 billion. We're going to come back to that a little bit later in this video. Now that we've covered who Peter Thiel is, it's important to talk about some of the different accounts that he used to build his $5 billion Roth IRA. So let's start by talking about what a Roth IRA is. IRA stands for Individual Retirement Account. A Roth IRA is an account that allows you to put money into it for retirement, and you put the money in after you've already paid taxes on it. So let's just say you worked your W-2 job, you paid taxes, and now you have money left over that hit your bank account as a form of direct deposit or a paycheck. Now you take that money and you put it into a Roth IRA. That money has already been taxed before you got it, and so once you put it into the Roth IRA, it's considered post-tax money, and then because you've already paid taxes on it at the beginning, the government allows you to let that money grow tax-free until you retire. And then once you retire at the age of withdrawal, you're able to then take that money out tax-free. Because you paid the taxes up front, now at the back end, when you take that money out, you don't have to pay taxes on it again. There's another type of retirement account called a traditional IRA. Again, this is another individual retirement account. But traditional IRAs differ from Roth IRAs because a traditional IRA is contributed to with pre-tax dollars. So what happens is you tell your employer that you would like to contribute to a traditional IRA, and then they're going to take your gross wages, then they'll subtract out your retirement contributions, and then you'll pay taxes on the remaining amount, and then you'll get to keep the rest. And so now you've put this money into a traditional IRA, what's called pre-tax. And because you haven't paid any tax on that yet, at the end, when you get to retirement and you go to withdraw that money, you'll then pay tax on the money when you withdraw it in retirement. So the difference here is traditional IRAs, you pay taxes when you retire and you withdraw the money. A Roth IRA, you pay taxes up front and then you withdraw the money tax-free. Those are the most common individual retirement accounts. You can also have traditional and Roth 401ks. But in this video, we're just going to talk about IRAs. However, there's a third IRA that's important to understand for this story and what Peter Thiel did. And I think a lot of people are probably familiar with traditional and Roth IRAs, but I don't think a lot of people are as familiar with self-directed IRAs. So let's take a minute and walk through what a self-directed IRA is and how it differs from a Roth and traditional IRA. A self-directed IRA is pretty much exactly what it sounds like. You get to pick all of your investments. And you might be thinking, well, I can do that in my Roth or traditional IRA. So what's the difference? Well, the difference here is if you open a traditional or Roth IRA, typically that's going to be with a large broker or brokerage, usually online these days, like Fidelity or Vanguard or Charles Schwab. Now, if you do that, you have to use their platforms, and you're only able to purchase stocks, bonds, mutual funds, maybe do a little bit of options trading for the most part. But you can't really purchase alternative assets. Now, if you use a different account, which is called a self-directed IRA, it's also still a retirement account, you're able to still invest in stocks, bonds, and mutual funds, but now you can also invest in alternative assets. You can invest in real estate, you can invest in cryptocurrencies, you can invest in all kinds of different alternative assets. There are some things that you're not allowed to invest in according to the government, but for the most part, there's a lot of alternative assets you can invest in. You can even invest in private companies using your self-directed IRA. And so that's going to be an important fact to remember for when we get into Thiel's story and how he did it. With a self-directed IRA, that's just the account type. You can also still have a Roth self-directed IRA or a traditional self-directed IRA, and the tax implications there are the same as they were with a normal Roth IRA or traditional IRA. The only thing that's different is the different investments that you can make and the opportunities that you have with the new self-directed IRA. The difference is what you're able to invest in. So taxes are pretty much similar, but what you're able to invest in is a little bit different. All of these accounts typically have a contribution limit. So this is going to vary from year to year. So depending on when you're watching this video, the figure is going to be different. So I'm not going to give you a specific amount for this year's contribution limit, but right now it's typically around $5,000 to $6,000. When you're watching this video, maybe it's a little bit less, a little bit more. But just keep in mind, it's important to remember that there are typically contribution limits, and this goes for traditional and Roth IRA, as well as self-directed IRAs. There's also an income limit for Roth IRAs. Because this is typically seen as a massive tax benefit for the users of these accounts, the government doesn't want ultra wealthy people using them if they make too much money. Now there's one caveat there, because about a decade after Roth IRAs were created, Congress actually created what's called a backdoor Roth or a backdoor conversion. And so what you do with this is you contribute money to a traditional IRA. And the reason for this is because there's an income limit on Roth IRAs, like I mentioned, but there's no income limit on traditional IRAs. So wealthy people and people who are above the income limit are able to contribute to traditional IRAs. And then you do this backdoor or Roth conversion. And what that does is you pay the tax, the one-time tax, to convert the money from traditional to a Roth IRA. So now what you can do is you can be over the income limit, contribute to a traditional IRA, and then convert that money to Roth by paying a one-time tax when the amount is smaller, and then all of your investment gains from there grow tax-free. Again, please remember that this is not tax advice. I'm not a CPA. Please consult a legal tax advisor to get into the nuance and the income limits and contribution limits for this year that you're watching this video. But this is generally speaking how these accounts work. So now that we've laid the groundwork on who Peter Thiel is, the different types of accounts he could have used, let's get into what he actually did. So as I mentioned, there are income limits and contribution limits. So back in 1999, the contribution limits for a Roth IRA were about $2,000, and the income limits were about $110,000. Back then, Thiel was an executive at PayPal, the company that he co-founded, and his salary was about $73,000. So he was under the income limit for being able to contribute to a Roth IRA. And overall, this isn't really that surprising. We see executives at major companies that they're founders of not pay themselves a lot of salary. Warren Buffett, Jeff Bezos, Elon Musk, these guys don't make a lot of money for a salary. Instead, they use stock grants. And so the early days of PayPal was no different. The executives and Thiel didn't have a very large salary, but they had pretty big stock grants. Now, the stock grants Thiel purchased, he used his Roth IRA, and specifically his self-directed Roth IRA. And it's important to differentiate that he used a self-directed IRA instead of a regular Roth IRA, because with a regular Roth IRA, you're typically constricted to stocks, bonds, and mutual funds. PayPal at the time wasn't a public company like it is today, so he couldn't buy shares in the company using his Roth IRA, his regular Roth IRA. But now, because he set up a self-directed IRA, he could buy shares in private companies. So, Thiel purchased $1.7 million worth of PayPal shares. So, what did Thiel do? He put $1,700 into a Roth IRA, which is less than the contribution limit of $2,000, and then he was able to purchase shares in PayPal for just a tenth of a penny. So he purchased 1.7 million shares to use up his entire $1,700 balance in his IRA. If you think about that, what PayPal shares are worth now, or even a decade after 1999, back in 2009, 1.7 million shares of PayPal could clearly be a lot of money. And again, because he did it in his Roth IRA, even though it's self-directed, that entire gain is tax-free at retirement. It's interesting to note that after that $1,700 contribution Thiel made in 1999, records show that Thiel has never made another contribution to his Roth IRA, and still it's worth $5 billion today. In the first year after Thiel purchased those shares of PayPal for $1,700, he experienced over a 225,000% gain, and it was worth just under $4 million. Then just 3 years later, PayPal was sold to eBay. And at that time, in the end of 2002, Thiel sold his shares in PayPal, and it was estimated that that was now worth just under $30 million. So Thiel purchased shares in PayPal for under $1,700 and turned that into just under $30 million in 3 years. Because that money was in his Roth IRA, and even though he had a massive windfall from selling his shares when they sold to eBay, even though Thiel was able to grow his investments massively to just under $30 million, that was all still in his self-directed Roth IRA. So he's not able to take that money out unless he wants to pay a penalty and taxes. So he has to let that stay until retirement. But he can then reinvest that money, and that's exactly what he did. So he decided to invest this money into other Silicon Valley startups, his own hedge fund, and he even invested, again, similar to PayPal, in a company he co-founded, Palantir Technologies. Then, in 2004, Thiel went to the Harvard campus to meet with a young, budding entrepreneur who seemed to have a good idea, and that's none other than Mark Zuckerberg. Thiel invested $500,000 from his Roth IRA as the first large cash outside investor in Facebook. Just 4 years later, by the end of 2008, because of the investments Thiel had made, his IRA was now worth just under $1 billion, about $870 million. And that's up from about $30 million in 2002. So in just 6 years, you went from just under $30 million in his Roth IRA to over $870 million. And backing even further, from 1999, he had $1,700. Less than 10 years later, that $1,700 turned into $870 million. Fast forward just about a decade, from 2008 to 2019, Thiel's IRA is worth $5 billion, according to confidential IRS documents. And to put that into perspective, the average Roth IRA in the United States at the end of 2018 was worth under $40,000. And I actually just had the VP of Business Development for a large self-directed IRA provider on the podcast, and they have $4 billion in assets under administration. An entire company that provides self-directed IRAs to investors has $4 billion in assets under administration across over 20,000 accounts. Yet Peter Thiel has $5 billion in his own account. That's $1 billion more than this entire company has across 20,000 accounts. And they're not a small self-directed IRA provider. Now, there's been some debate across the world whether this is unethical or if it's a brilliant use of the tax code by Thiel. I personally believe that it's a brilliant use of the tax code. Assuming that Thiel has made no illegal investments and not broken any laws that are written based on these accounts and what he's allowed to do. Now, whether that means he should pay his fair share in taxes or not, that's an entirely different story. But for me personally, I think if the tax code is written that way, then it's all for using. And I actually recently read a book called Tax-Free Wealth. It's part of the Rich Dad, Poor Dad series. And in that book, the author, Will Wright, mentions that the government typically writes their tax policies to incentivize investors to invest in certain things. They write their tax policies to guide people to make certain types of investments. Of course, they didn't write the tax policies assuming that people like Thiel would become billionaires using these types of accounts, but the tax code is the way it is, and Thiel, as long as he followed the rules, I personally think it's a great use of the tax code. And he's not the only one. Warren Buffett has a Roth IRA worth over $20 million. A deputy of Warren Buffett's, Ted Welcher, actually has one that's worth over $250 million. And I'm going to paraphrase here what Ted Welcher has said about this, but basically what Ted has said is that this loophole should probably be closed. He said that he probably should have to pay his fair share of taxes, and whether this is right or wrong is really up for debate. But in general, if it's available to people, he would be crazy not to use it. I tend to agree with Ted and feel the same way. What does make Ted a little bit different than Thiel is that Thiel used private investments in companies that he co-founded. And he also used his reach to invest in Silicon Valley companies and also Facebook that probably not everyday people could access, especially if you're not an accredited investor. Whereas Ted Welcher says that his investments, the way he was able to grow his Roth IRA, were all through publicly traded investments or things that anybody in the public would be able to invest in. So there's a little bit of a difference there between what Thiel did and Ted Welcher, but either way, both of these guys have amassed a very, very large Roth IRA balance that they'll be able to use tax-free as long as they don't touch that money until retirement. I mentioned that if you stay until the end, we'll talk about whether or not you and me and everyday investors can replicate what these guys have done, and specifically Thiel with his Roth IRA. The short answer is yes and no. Yes, in the sense that we technically are legally allowed to make all of the same investments that Thiel did. If we were able to somehow meet Mark Zuckerberg and we were also accredited investors, we would have been able to make an offer to invest in Facebook just like Thiel did. So, technically speaking, we could have done that. However, the difference here is that not everybody is an accredited investor. I'm not an accredited investor. And we also don't have the relationships that Thiel had. We don't all know Mark Zuckerberg. So the chances that we could have actually found Zuckerberg in the early days of Facebook and made an investment are very slim. So whether or not we're able to replicate this, technically speaking, the answer is yes. You can replicate it. Is it actually going to happen? Is it probable? I would say it's very, very unlikely, given the relationships and access that Thiel had that we as individual investors and everyday investors don't have. Now, the one caveat that I will make is that with the rise in equity crowdfunding, you are able to use your self-directed IRAs to invest in private companies, more so and more accessible than you ever could before. Now, not all those companies are going to go and become the next Facebook or even IPO. Some of them are going to go to zero. Actually, a lot of them are going to go to zero. But you do have access to now invest in some of these companies that are pre-IPO. There are some that you were able to invest in that have IPO'd recently. You did have to be an accredited investor for some of them, but there are a lot of equity crowdfunding investments that you can make without being an accredited investor. Thank you guys for staying all the way to the end of this video. I hope you found the information interesting, and I hope it taught you something. I know I really enjoyed researching and learning about this video, and also creating the video for you guys. If you liked the video, be sure to like and comment below, as well as subscribe and hit the notification bell so you don't miss any of our videos. Doing these couple actions just takes a few seconds. It really helps the YouTube algorithm, and it helps us grow and allows us to be able to continue to put out all kinds of free, awesome content for you guys to consume. We really appreciate the support. We really appreciate you helping us with the algorithm. If you want to connect with me directly, you can find me on Twitter or Instagram at @TheRobertLeonard. Until next time, see you guys.